Welcome to the Skeptic's Guide to Investing with Steve Davenport and Clem Miller. Every 2 weeks, Steve and Clem bring you brief investment insights you may not find anywhere else. We hope you enjoy today's episode. Here are Steve and Clem.
Welcome, everyone, to Skeptic's Guide to Investing. Today, we're glad to have Clem back from his Japan trip. It sounds like it was a good time, 30 days away, and walking around, doing 10,000 steps a day. He's looking very fit. And we've got to talk about the latest hysteria. And today, it's about gold, the shiny yellow metal that never seems to be able to figure out how much it's worth. So it's gone hyperbolic, and we're all wondering, does gold know something that we don't know? Is there something happening in the mainline system that is making people run to gold as a protection trade, as a safety trade, as I'm worried about all my other assets, so I want to have a little bit in safety. So, Clint, how safe is gold, and is it the place that we all should be taking a little bit of our NVIDIA and our Avgo and our Microsoft and putting it in the yellow metal and just forgetting about it for a while? What do you think?
So I think the key question right now, Steve, is it too late to make this trade? I think if it were months and months ago, it would have been a great time to get into gold. And in fact, I did. Okay. I think I started getting into gold maybe about a year ago or 8 months ago, something along those lines, and sort of let it rip in my portfolio. And so as of Thursday, when I got back from Japan, it was at, I had about 18% of my portfolio in gold, which is a lot, right?
Yeah.
And you had this big drop in gold on Friday, and you had another drop in gold on Monday and on Tuesday, right? Today being Wednesday, and so it started to kind of scare me. Like, should we, have we reached a top? Should I start trimming my portfolio so that I'm, sort of back to where the gold price was maybe 3 weeks ago or a month ago or, 2 weeks ago? And so I have been trimming every day since Friday. And so now down, I was 18%, now down to about 11%, and buying some additional stocks and sort of beefing up cash a little bit. So right now I've got about 20% in cash in the portfolio. And you might wonder, well, why do you have so much cash in the portfolio? Well, I'm concerned about stocks as well. Are we reaching a peak on stocks? We haven't seen, even though there have been days where we've been at highs, it's really sort of bouncing around on a plateau. And so I'd rather not ride the market down, right? I'd rather have a good buffer in cash. And so I've got about 20% in cash. That's
Yeah, and I think that's smart. I think you're. I saw somebody out there telling us that gold is going to hit 5,000 by the end of the year, and it very well could. I heard someone else say that it could hit 10,000 in 2 or 3 years, and yes, it could. It could also. I was listening to someone on last Thursday or Friday, and they said we think it's going to go back to its 48-month moving average, which is about 2,600.
Yeah.
Oh,
So honestly, nobody really knows, right? And
correct. And I think that's what I'd like to talk about is, do we think the gold is doing what it's doing because of a safety trade? Do we think it's doing what it's doing because it's a precursor to inflation trade? Because people are saying as we lower interest rates, we know inflation is going to go back up. And so the gold buying is really just a way to try to add another hedge to inflation. I know that there's all kinds of studies about gold being worthless and being dead money for 10 years, 12 years, 15 years. I think those people also forget that stocks was dead money from 2000 to
Right.
2006 or 7. And then after the 2008 crisis, it was dead money till 2012, 13. So stocks also go into dead money for a period
Right.
of time. And I think I also think there's a lack of confidence in governments and fiat currency. I mean,
So,
which of those is the reason that gold is going up in your mind? Give me a percentage. How much is fiat, is inflation, and how much is
you can't
I'm
give a
just
percentage.
nervous?
You can't give a percentage because they're all, there's sort of overlapping reasons there.
Okay, what's the number one reason?
I think the number one reason that gold has been going up is because China and some other central banks have been buying gold.
Yeah,
And I
I
think
believe. Yeah,
I think that's the number one reason. I think that's likely to continue. I don't think they're going to sell gold. I think it's likely to continue that they keep purchasing. So that is, I think, an um, underlying positive tailwind, right, for gold. And I think that ties into geopolitics, in that eventually China is looking forward to a day when it can try to, obtain, not just hard currency status, which it doesn't right now, still, but status as one of the major reserve currencies.
right.
And so, they can do that only if they open up their current and capital accounts. And in order to do that, they need to create some confidence that people don't already have in the Chinese authorities. And so to do that, they intend to back that up with gold. So
Right.
they've been doing that. So I think that's a reason to uh, hold gold. So that's the first thing I would say. Second thing I would say is I think that there's a lot, including myself. There's a lot of concern about policy making in the U.S. especially, and I think that's putting, that is raising questions about the dollar, right? And I think I don't see questions about policy diminishing, um, throughout the rest of the Trump administration. I just don't see it, and I see continued probability of political unrest in the United States, and I think that's likely to put some pressure on the dollar as well. So,
Yeah, I mean, I think that when we might be trying to make it more complicated than it is. If the US is lowering rates, people are going to probably go for other places where rates might be higher or getting higher. And so I always wonder if if we just look at the direction of where we're going, which is lower rates, I think lower rates are inflationary. And I
yeah,
think most people believe that. Um, for your first point about China being a buyer, I believe that gold is a good investment because all of these countries are adding to their gold reserves. So
yeah,
if if we look at it and say, listen to some of the people on the news who say gold is a horrible investment. It doesn't pay you anything. It's not, it's not, it doesn't make sense as an investment. It's really just a fear trade and it doesn't have any. And then I ask, well, why are all these treasuries of all of these countries buying gold then? Don't they have PhDs and people who are trying to maintain their current accounts? And why would they not be smart enough as you are that they wouldn't buy gold? They would buy something else. And it really does come down to China and the yuan, I believe, because China wants it to be a reserve currency. They want everything to be denominated. Right now, I believe that foreign transactions, somewhere around 70% of all transactions are in dollars. And I look at that number and I think that number scares China because I think they want to be considered a reserve currency. They want to be considered the reserve currency. And right now, their percentage backed by gold is somewhere less than 1%. And I think that the US, well, not exactly fully backed, is only backed by 6 to 7%. And so when you look at that and you say, how do they get to 6 to 7? They just need to buy more. They're a buyer, but they don't produce any gold. It's amazing to me that China imports oil and imports gold. Two things that you would think that being next to Russia, they should have similar, similar characteristics of the earth and the crust that they would be able to get these things, but they're not. And so as the economy grows for China every year at whatever the government number is, 5, 7,
which is a fake number, but
let's just say it's a positive number, and as it becomes bigger, that means that the economy is bigger, and therefore the amount of gold they need is going up, right? So as a country, if you don't produce it, then you need to buy it. And so therefore, I think the demand that China is going to have is a 20-year demand, not a 2-year demand.
Oh, I agree with that. There's no question about that.
So they want to be considered legitimate. And legitimacy comes when the world adopts your currency as the choice.
So, that was my thesis, my most important thesis for buying gold and holding it over the last year. Okay. What's happened is that people are starting to catch up with that thesis, and they're getting excited about it now after the price of gold has soared so much. And especially over the last month, gold has gone hyperbolic, and it's just crazy what happened in the month through Thursday. It's just crazy the amount that it's risen. And so, you've got all these folks about a month ago who, were getting a severe case of FOMO, right? Fear of missing out. And they started plunging into gold and driving the price up. And, at that point, those who are, the smart money, and I like to think of myself as smart money. I don't know, Steve, maybe
I think there's different types of efficiencies in the market. There's weak, semi-strong, and strong. And so I would put you as the semi-smart money, not the truly smart money, but I think somewhere in the middle of semi-smart is where
I think the semi-smart money would look at how much it's risen over the last month and say, I don't think it's going to, I think there's a greater likelihood that it'll fall than it is that it'll rise more. Okay. So yeah, I mean, if at some point it starts to rise again in a moderate way, it may be worthwhile, increasing my holdings again. But right now I feel, and I know a lot of people would say 11%, that's still a lot. And it is. So I'm not giving up on the gold thesis. I'm just, taking my profits, right, from the last
I think it's smart. I mean, I look at a name like Oklo, the nuclear, They use smaller
Yeah.
nuclear reactors, and there's no revenue for the company, and there's probably no revenue next year. And the question is just how much are they going to lose, not how much they're going to make.
Right.
And, it's up 625% year to date. So, I look at that and I say, geez, gold's up 30 or 40, in the last month. It's got another 570 to go before we get into, arc low territory. I mean, I think that assets are going up strictly because people have money and are using that money and those gains to leverage themselves with call options and other ways to get exposures to upside. And I think the thing that will mitigate that is that when you have a 6% down day or a 5% down day, all of a sudden you realize that this isn't a one way street. It's a two-way street.
Yeah.
And I think that realizing that, I've been encouraging everyone to put a little aside and then be prepared when it comes back. And I think that it will. It's really a question of when. And I believe, and we're going to talk about this in our next rare earth podcast, but I believe this discussion with China in the next 2 to 3 weeks is going to tell us a lot. It's going to tell us a lot about how we're going to get along with China. And if rare earths are not available from China, who's going to be affected? The AI trade is going to be affected because they need those magnets for a lot of the boards and the chips that we manufacture. So I think that it's wise to be prudent and it's wise to be skeptical. I believe that overall we know how this story goes. And when I think about gold potentially correcting to 2,600, I think taking a third off or a quarter off like you did is a very good idea. I don't think we should expect things to grow to the sky. I don't think trees do that. I don't think we should expect our stocks to do that and our positions. If it's gone up, great. Take some of your profits and reallocate and diversify so that you're well positioned if there is a pullback to take advantage of it.
Yeah. Too many people just get this fear of missing out, and they just keep piling into something that eventually is going to drop, and then they all get upset, embarrassed, whatnot, when all of a sudden there's a huge pullback. And
Mm.
I'd rather
Yeah.
not. I'd rather not. I'd rather not be that person, right?
Yeah, can I just propose one other choice, which I've been listening to Thoughtful Money and Adam Taggart, and he's a pretty big proponent of gold, and he owns a pretty good amount of it, and he's hedging his gold with a collar. And I think it's there are options on GLD. So if your exposure to gold is in the ETF, it's buy a put, sell a call, maybe at 5,000, buy a put at 3,200, and say, okay, those numbers are for the overall price of gold, and the ETF price will be different. But you get the idea. 20 down, 20 up, and you've then immunized yourself against a move back to the moving average, and you've positioned yourself so that if the collar expires and it hasn't done anything but gone up to 4,500, you reset it to 5,500 and 3,500.
Yeah. The only problem with that is, by selling some of it, I'm developing cash that I can put into stocks, right?
Right.
Into
But
a
you
new.
also already have cash. So
Yeah.
it's,
Yeah.
I think that I like to be a middle child, as I've told you. I like to do things that are kind of in the middle. You sell a little, hedge a little, and then all of a sudden you feel like you've done something. So there's a real benefit to getting off your seat and doing something. I think sitting there and worrying is not the right choice. I mean, we spend 90% of the time or the things we worry about never occur. The 10% of things that do occur that we worry about the outcome is usually better than we expect. Our worry is killing us. It's creating our anxiety and all of these things. And you shouldn't have this anxiety if something's up 35%. You should just be grateful and say, okay, I flipped this coin and it went my way. Now what I'm going to do is to try to immunize myself and make myself stronger so that I can go out and find the next opportunity.
Right.
I think that by doing that, you're always in the dynamic of growth mode versus fear mode. You're not going to get very far in fear. You will get further with growth.
Yeah.
Anything else we want to say about gold?
No, I think, I would also say that, the silver trade, was paralleling gold and has been paralleling gold. So I just say that, and a lot of people were saying, well, gold's up, so maybe I should put more in silver now. I'm not sure that that's such a great idea. I think you should look at gold and silver as the same part of the same complex.
Yeah, the thing about silver is silver has a little more purpose, right? It has plating and other things that it does have a demand in the market. I've been listening to a lot of people talking about the relationship between oil and gold and that it's way out of whack. And that what it means is that probably all of these servers and all of the uses that we're seeing for some of the technology is going to require more energy. All of the crypto mining requires energy. Therefore, oil is eventually, and with peace in Gaza, that's going to lower the price of oil and it's going to create a buying opportunity, and the next commodity to buy is oil. I think it makes a lot of sense. It's a long-term play. There's different ways to buy it with futures contracts or with producers, but I kind of believe in the energy trade, and I believe that oil will play a part in this whole AI revolution. So I think it's just like you need the servers and you need energy to run the servers, you're going to need oil to provide that energy. So I
Steve,
think that's
I'm not sure I agree with you on energy. But we can leave that for a different podcast.
all right. Continue to be skeptical about each other. I think that's what makes us beautiful. So thanks everybody for listening. We appreciate you and appreciate having Clem back. And please listen in, give us your comments, give us suggestions. And we love producing good material that you want. So let us know. All right, everybody, have a good day.
Yep.
The views shared on this podcast represent the personal investment views of the hosts. They are for educational purposes and not meant to be taken as investment advice. Listeners should consult their own investment, legal, and tax advisors. Past performance of any investments is not a guarantee for future return.